Here are 5 mistakes that day traders make when starting out their day trading careers. So starting with error number 1, and this is probably the most serious error that I've seen people make in the past. And in fact, it's an error that traders make before they even place their very first trade, and that is trading platforms. What trading platform do you trade with when you start to become a day trader? Now, it's incredibly important that you make sure that your trading platform is regulated. What does it mean to be regulated? Well, each country will have a financial authority, and it's incredibly important that that trading platform is accepted and approved and regulated by your country's financial authority. So for example, here in the UK, we have the FCA, the Financial Conduct Authority. Now, if you are a UK citizen and you want to trade with a trading platform here in the UK, it's important that you make sure and verify that that trading platform is regulated by the FCA. As a day trader, it's so important that when you become successful later on down the line, that when you go to withdraw some of your trading profits, that brokerage can actually go and process those withdrawals. I've heard so many horror stories in the past of traders that have made a significant amount of money, and when they've gone to withdraw those profits, the brokerage hasn't been able to process those withdrawals. So moving on to error number 2, one of the most common questions I get here at the Investing Hub is, Max, how much money should I fund my trading account with? How much money does it take to become a successful day trader? And my answer most of the time shocks many of my viewers. That answer being very little. One of the biggest misunderstandings when it comes to day trading is that you need a substantial amount of money to become a successful day trader. And that's just simply not true. If you are starting your journey out as a day trader, start with as little as possible. It's very important that you understand that when you start day trading, whatever money you deposit onto your trading account, there's a very high chance of you losing that money. Now, I've heard loads of horror stories over the past 10 years of my trading career where I've had people come to me and say, Max, when I first started investing, I put my life savings, from $10,000 all the way to people who deposited $250,000 onto their trading account when they've had very little knowledge in the financial markets, and they've gone on to lose their whole life savings. So there's a saying that I like to share with many of my viewers, and that saying is, you never test the depth of a river with both feet. You put your left foot first to see how deep it is, and then when you're comfortable with the depth, that's when you then put your right foot in. And it's the exact same for trading. Trading is an emotional roller coaster, and you may find that it's not for you. So start off with $100 instead of $1,000. That way, if you do go to lose your initial deposit, you're only losing $100. So what I'm trying to say here is, when you first start day trading, don't put your life savings or a very large amount of money onto your trading account at first. Only deposit a small amount of money which you can afford to lose, so that you can test whether trading is for you or not. So moving on to the third mistake that traders make, and that is that they analyze a particular asset on their trading platform. Now, when you create a trading account, your trading platform will usually provide you with a trading chart. It's very important to understand that that chart is just there for basic needs, just to kind of check the price, look at the latest candle, look at where that asset has closed on a daily or weekly or even monthly basis. It's not there for you to analyze that particular asset from a technical perspective. Yes, several trading platforms these days offer support and resistance lines, they offer the Fibonacci graphs, etc. But one piece of advice for you all is, don't technically analyze any trades on your trading platforms. Use websites such as TradingView, and just to clarify, I do not have any partnerships with TradingView, but I use it on a daily basis. You can see it on my trading screens behind me. This is fantastic. It's free as well. Yes, there are subscriptions, but if you're just starting your day trading journeys, use TradingView. TradingView is a fantastic software that you can use to technically analyze some of your trades. Now, moving on to mistake number 4. Now, this gets a little bit more technical. When you first start day trading, you're taught that there's 2 main strategies. One being technical trading, that's when you analyze charts and find patterns, and then the other being fundamental trading, and that's when you trade more, economic data releases, etc. Personally, one thing that I found for myself throughout my trading career, that it's incredibly important that you use both strategies when entering a trade. A great example of this is if you're technically analyzing crude oil, for example, and it looks as if it's breaking out higher, it's breaking out of a resistant area, and you go and place a big buy position in crude oil, not knowing that there is the oil inventory numbers that come out every Wednesday, which is a fundamental news event, that could potentially hurt your trading position. Let's say if the oil inventory is coming a lot higher than expected, that would then cause crude oil to drop significantly. So as a trader, make sure you're aware of both the technicals and the fundamentals when entering into any particular trade. And last but not least, mistake number 5 is overtrading. And I put my hands up, I'm guilty to this. When I first started day trading, I was terrible at this. So for example, you may have a trading day where you're winning everything. Every single trade that you place, every single piece of analysis that you've done on certain assets is working perfectly. And you may win 3, 4, 5 trades in a row, and you may feel that you're untouchable, where in reality this is never going to be the case. As human beings, we make several mistakes, and this may lead to you over trading. And it also works for when trading isn't going so well. For example, you may lose 1 or 2 trades in a row, and this may lead to you being incredibly frustrated, and you may start to overtrade to try and win back your losses. This is called revenge trading, and I was very bad at this when I first started day trading. So it's very important that you understand when you start investing, and perhaps you have a bad day in the office, like we all do. Even the best investors such as Warren Buffett, they're all guilty of having a bad day in the office. But it's important that you identify when you're having a bad day and that you take yourself away from your trading screen. So both on a good and a bad day. For example, if you've made a lot of money on any particular day and you're satisfied, take yourself away. Go and do a hobby, go and play a sport. Just take your mind away from your trading screens, because the market is not going anywhere. And it's the exact same thing for when you have a bad trading session. Don't try and chase your losses and win back what you've lost in the prior trading session, because again, the markets aren't going anywhere. They're going to be here tomorrow. They've been here for the past 100 years, so they're not going anywhere anytime soon. So do not overtrade. So I hope that you've enjoyed today's video. I've just gone through 5 mistakes that I've seen many day traders, including myself, make when starting out their day trading journeys, and I hope that I've helped prevent you from making some of these mistakes.